There. Good afternoon, YouTube live. I think it's called live, but the market review for YouTube for the Essentials Room. And I like to share this with my normal room, the Chart Patterns Mastery. So we're all set up in here, I hope. So last time I forgot to press go live. So I stayed on for a bonus session for the YouTube group. And just to let you know, if that happens again, I'll just stay on if I mess up. So just to let you know. So I hope everybody's doing well. I'll try to do my camera. Nah, it's not working, but this is what I wanted to show you. So I wanted to show you what's going on today and how we made money in Meta. So this doesn't mean, I just want to show you the chart because it happened yesterday and I wasn't going to miss it today. So let me show you what we're talking about. So the theory for me is that in a slow day, to me, it seems slow. So on a slow day, stocks tend to go to their biggest open interest. So I like to combine that with charts though. So keep that in mind. So this is what I wanted to show you. So here is Meta and here's the open interest. Now I trade on the floor a long time. You want evenly dispersed open interest. A lot of times that implies you're a lot of spread traders. When I was on the floor trading, if it approached 300, we had to unwind our positions. Most of the time we were long puts, long stock, short calls. That's called a conversion. It's a risk-free trade. You're not putting that in to make money on it. You're putting that in when you have to do hedges. So what I mean by that is if somebody comes in to buy calls, we have to short the calls because we're obligated as market makers. And how do we hedge that? Well, you got to buy stock. But if you buy stock and short calls, you still got a problem. You got to buy the puts. Why? Because if this blows through 300, those calls aren't protection anymore. So we were long stock, long puts, short calls. Just keep that in mind. And that's how we did things in here. So what does that mean? It means that if we have a massive position going into expiration, that if this approaches 300, we have to worry about getting pinned. So that's not like homecoming or the prom. So what I mean by that is if this closes at 300.05 and I leave because I think, hey, it's fine. Number one, if it's 5 cents in the money, these calls get assigned. So if I don't get out of the other side, you're going to sell the stock. That's fine. But the problem is you're not sure that until Sunday night or Monday. So you don't know whether to stay in the stock or not. So you don't want to mess with that. Now, let me just tell you, we've done this a lot of times. And when I was on Trader TV 2 weeks ago, we talked about it. So if this is 300.05 and it's like with a minute to go, then the 300 puts are probably going to be 3 cents. So the thing is, you could go buy them for 3 cents and you have an hour after the close to call your clearing firm, let's say it's Schwab, to say manually exercise them. Because when they're 5 cents out of the money, theoretically, they expire worthless. But what happens in that hour if something terrible happens in the world or in Meta? And it goes to 296. You can call them up, manually exercise your put, and the thing that was 3 cents is now $4. We've done these a lot of times, just to let you know. So, but you got to have, you got to stay for the extra hour. Now, why is that important? Because if you have a butterfly and your long puts the 305, short the 300s, long the 295s, or a farther out one, you better always buy the short strike back or you could get yourself destroyed because of something like that, because you might not be around. So just keep that in mind. We watch those very carefully in those. So we watch very carefully to be sure that we don't mess that up. Let me see if the camera works for the restream. There you go. Now, the problem with this in the YouTube is I'm always leaning forward because I'm trying to be like a cat with bait. So I'm always trying to be on my toes when I trade. So that's why you see me like this. I hate to just sit back like this because I think the stock market's intense and that's the way I trade. And I've traded that way for 40 years. But getting back to it. So, number one, the bigger the open interest on both sides, the more likely it is to go to that open interest. But you like to combine it with charts. So, where do you short this? Well, you sure don't short it here. So the first thing we do is we look at the ATR trailing stop. Now that's number one. So the ATR trailing stop, I use a 9 period, which means it's looking at 9 periods, whether it's a 1 or a daily or an hourly or a 1 minute. And then you take the width. So the ATR of 2.9. I'll show you. Yeah, 9 and 2.9. Now, there's a lot of things like you could do simple, exponential, weighted. I just use simple. That seems like the easy way to do it. Nope. That keeps you just on the correct side of the market. So you don't go and try to short it here. Now, this is where it gets interesting. Yeah, it broke right there for a second. That's not the point. I like a lot of points of contact. So when we saw this, we shorted the tar out of it right here. So that's where we shorted it because you don't know if it's going to break up or down yet. So that's where we shorted it. Where do you buy it back? Well, we had a butterfly, so we got out in here. Of course, I got out too early. But if you were shorting the stock, you could ride the white pony all the way down until it got back above here. So that's number one. The other thing, though, because it has to do with an ATR or average true range, because I'm using a certain average true range, if it goes wider than the average true range, then the ATR trailing stop gets too wide. So then I combine that with a simple moving average. If it goes down like this, it's great, nice and slow. But I'll show you the other thing we do. We take the 20 moving average, the simple. You can try an exponential. I'm always experimenting. So, and by the way, hey, Kevin. By the way, I'm showing the camera. I hope I'm not scaring anybody on the YouTube stream. In fact, I'd probably hide the eyes of small children, just to let you know. Now, getting back to it, simple moving average, and I'll show you on how I do it. There. So the simple moving average, all you're doing is that's going to be closer to the price than the ATR trailing stop if you get a nutso move. So here I see a lot of times it fakes you out. I'd rather use the ATR trailing stop. So if you want to use it here, sure, but it worked great. So all you're doing is taking that ATR trailing stop and messing with it. So definitely keep that in mind. And that's how we try to do things. So ES, what do you do with ES? Well, just to let you know, it worked in there too. So here you go. It got too far away. So how do you use the ATR trailing stop that's so far from it? You use the 20. Yeah, you could get stopped out. That's why I'd rather use the ATR trailing stop. But it was okay. You got stopped here. It stayed in that area. Then it gets above it. Stayed above it until right here. So then you're out. There you can draw a trend line again in that area. So you're under the ATR trailing stop. You stay in until here. Now, is that a perfect one? Well, it's still 5 points. Not totally perfect, but it did work. It's all about being on the correct side of the market. That's all you're doing is trying to be on the correct side of the market which means that on the way up, you don't screw around on the short side. So on the way down, you can wait for your trigger on the upside. So, I mean, that's the way we try to do it. So just to let you know in there. So what else are we doing today? Well, number one, the ES, we did Z. That's a December contract. Trades at a big premium to the actual cash, which really doesn't matter when it comes to the ES. When it comes to things like wheat and stuff, they have a habit of filling the rollover gap. But I don't trade wheat. I'm just telling you for informational purposes. The thing is, with the ES in here, is that. So you got to take your profits quick, because when you see this, you got to worry about it going to the path of least resistance. In fact, give me a second. So we had some real winners. I just had to post a 6-cent loss. 6-cent loss. That was it. But this is what you're having to watch now. You're having to watch that right there to see if it holds. Now, the next part of the equation is that MACD I use all the time. So, next thing, why do I show a MACD? Because if I see something break out like here, or it looked like it was breaking out, if it's overbought short term, I'm not going to jump on it. As you see what happened if on an hourly, it got overbought. So it's all about probability. So let me put this in here. There. So when it had that surge this morning, so it looked like it broke the ATR trailing stop and all that stuff. The problem is it was already overbought. So I didn't chase it. Theoretically, if it gets over this, it could go up to here, but here you go again. It's overbought. So what do you do when it's overbought like this, but it looks like it could go to the next level all the way up to here? I usually just get out and ask questions later. There. I just ask questions later. It's overbought, doesn't have a lot of resistance, and keep in mind, it can get more overbought. But I'm not touching when it's in this zone when I don't have enough reasons to play it to the upside because it's overbought, and I don't have enough reasons to play it to the downside because I don't have that kind of reversal pattern like we had in Meta earlier. So that's where I am at the moment. So there are a couple of little things to know in here that I think is a big deal. So number one, on September 11th, the market almost always goes up. Patriotism kind of thing in the US. So almost always goes up. So I'm not coming in short over the weekend. Now, just keep in mind, though, that just because I say that doesn't mean the market has to open up. But I just don't want to screw with it. So I usually just flatten out before then. So just keep that in mind. So definitely, that's something to just keep in the back of your mind. So, but when I see this up here, On the upper left, just going up, but it's getting overbought on an hourly. I really don't have an idea, except that if it got up to here, if it got up to here, over that, right over that, and got to there, that would be a layup short. No doubt about it. At the moment, I don't have an idea at the moment. So just keep that in mind. And that's where I am right now. I'm trying to do one other thing, so give me 1 second. Like I said, it's a tale of two things. On the one hand, you have that it's oversold on an hourly. On the other hand, if it gets over this, it could go to here. Now, what's the big caveat? I try to combine it with other things going on. So what I mean by that is the individual stocks I'm watching, like JP Morgan, like Nvidia, they just won't bounce. So the probability of this breaking up, if these act this bad, goes down dramatically. So just, keep that in mind. So definitely keep that in mind. So that's what I'm doing right now, which means I'll definitely jump on something. And I'm watching right now this. I'm watching that. So I'm watching this little thingy right there. So if that doesn't hold, keep in mind a lot of NASDAQ stocks acting like garbage. So definitely that could go all the way to here or lower. And if that goes all the way to here and lower, it's going to pull down the ES. So that's where we are right now. And as you see, it's starting to break down. So starting, but not there yet. Just keep that in mind. Not there yet. So that's where I am right now, that it could still go either way. Because on the one hand, you have seasonal only tomorrow on a Monday. So you got this seasonal that could take it up. On the other hand, it's overbought on an hourly. And then you have on the other hand, you see the lack of resistance if it gets over this. And I'm only going on prior tops and air holes, which means it went down fast, so that's very little resistance. Up here, yeah, I'd look for reversal patterns. This does not mean to short right here. This means at that level to look for reversal patterns. So go like 1 time frame less or 2 time frames left, like a 5-minute. And that's how I try to do it, which means at the moment, and I'm having a problem with Chart Patterns Mastery getting anything to work. So give me a second here. So I'd like to share in there. I am back. So the whole thing is, on the one hand, you have that this might go up and might go to there. That's the positive. The negative is you're already overbought on the bottom right, MACD wise, on an hourly, and the individual stocks aren't acting well. So every little downtick of that ES, you're watching the Apples and the Amazons get hit. So that's puts you in a dilemma. So usually when I'm in a dilemma like that, I just don't trade. So that's how I look at it. Now, long term. So I'm going over market outlook, I think is the title. So the first thing I'm looking at is this. I'm going to the ES on a daily chart. Usually when you get a sell-off, and by the way, if you're wondering what these are, I do charts I post every Sunday night, Tuesday night, and Wednesday night, and they've been a big hit on our site. So usually and you'll see it's gapping up because of that December contract. When you get that, you got to do SPX instead. But regardless, usually markets go to their 200 moving average in a sell-off at the minimum, as you see back here. So they're not even close. So how about the NASDAQ? NASDAQ's not even close. So how about the Dow? Well, it's getting there. So it's closer than a lot of other things. How about the transports? They're getting there. And that's another thing. If I see individual indexes start to go to here, then the probability goes up dramatically that these two will try to go to it as well. So just keep that in mind. Like I said, ES is not up 63. That's because they are counting for the December contract. So just keep that in mind. So number one, theoretically, I think this goes to the 200 eventually. So we could use SPX instead. There, that's that non-contract adjustment. There. So that's what I'm watching. I'm watching that. Yeah, everybody talks about that being a head and shoulders top, but you don't have that last gush down. If that does work and you do it by measuring like the trend line to the top, it's just amazing. It goes to the 200. So that looks like a lot of eyeballs and stuff. Sorry about that. But theoretically, the problem is nothing's turning down yet, like you see, yet. So all we're doing today is filling that gap. The problem is that if you want to be a short, is you got to worry about it going to here. So theoretically, after September 11th, I don't think it goes there. I think it goes lower, but I'm not sure from where. That's the big $100 million question right now. And that brings me to something else. I'm just watching the market for the chart patterns mastery, see if I have to post anything. All I did was post a tiny loss. We had big gains earlier, tiny loss. Let's say you're not sure. So you see the ES on an hourly overbought. So it's like, yeah, it could go to there. On the other hand, you have a lot of stocks not acting well. So you're like, I don't really want to mess with the SPX. I could get myself destroyed. So you can go and do the SXP. So here's the SPX. It's up 15, a $4,000 contract. So let's say you want to do a spread underneath. Well, they're expensive. So if you did a 20-point spread, it's like $600. So you could do XSP, which is a tenth. So it's 60 cents. So if you're wrong, you lose $60. If you're wrong with the other, you lose 600. Now, you're not going to make as much, but the point is, unless you have like a meta layup pattern, I'm going to trade smaller. That's all I'm going to do. If I see this, in the SPX, darn right, I'll trade the SPX. If I don't have 3 reasons, I'll go and trade the XSP. So, I mean, that's how I'm trying to structure how I trade every day. So just keep that in mind. I'm not sure what you mean about the setting. So on there, if you can be more specific, I'm happy to answer it. So number one, I don't know if it's Trading View or Thinkorswim, but here's my studies. That's about it. So in fact, let me do a screenshot of that for everyone. Just so you have it in your hip pocket. None of these are proprietary. They're on a selection of Thinkorswim. Let me share that with you. Yeah, I'm not sure exactly what you said. That's the whole problem. But here's my settings, if this helps. It's not letting me share it. Let me see if I can share it. No, the screens aren't working. Give me a second. There, I hope everybody can hear me now. Sorry about that. My browser locked up. So I hope everybody can hear me now. So let me try to share that file with you. Give me a second, Aircon. That was earlier. There. So there's my settings. So I hope that helps. Regarding on the restream, let me see if I can share this. I'm not exactly sure how, but I'll try to drag and drop. No, that didn't work, but that's my settings that I was showing. Now, in answer to your question, the 2-line settings, number one, I use it on all time frames. Definitely all time frames. So keep that in mind. That's number one. Number two in there is you have to combine it with other things. The number one thing, and I hope you can see my screens now, and I'm sorry about that. The number one thing is chart patterns. That's number one. That's why I showed you this, and I showed you if it broke that. Have that. But the biggest deal right now is market feel. And the market feel was the individual stocks were acting like garbage. So the other thing, I use the bond market a lot. And if the NASDAQ won't go up and the individual stocks won't go up, and when the bond market was up 20, then if the bond market sells off, the market will probably sell off. That doesn't always work, but it does work when the bonds have gotten destroyed for a long time and the overall markets have it. So the markets become ultra sensitive to that. So in there. So I hope you can hear me now. I'm sorry about that earlier. So there's your uploaded image. Like I said, I don't know how to upload it. And I wish I did when it came to Restream, but let me see. I don't know. So this is it. If you want to pause your screen, that's my settings. I mean, I use a lot of other moving averages, but this is key. Trailing stop, moving average, MACD. And if things go crazy, I'll use the 20 simple moving average for day trading. And that's it. I mean, I try to stay as simple as possible. And the real thing is to watch chart patterns like that. There's a top for you. There's a bear flag for you. So that's my number one priority. And I'm just seeing if there's anything else. I can't stress enough that when this is rallying, these better rally. And they didn't. I mean, they didn't even try to rally. So if they don't rally, then and the bonds were the thing that made it go up in the first place, the index itself, I'm looking for shorts, not longs. And you're also combining it was overbought on an hourly. Boy, did that work. Look at that. It's all about probability. So you can't just take that it's over that ATR trailing stop. You can't just take that it's overbought, but you can combine it with the individual stocks acting bad and the thing that made it go up this morning, which is the bonds aren't really up now. So that's, to me, 3 reasons. And like you see, the second the market went down, what went down first? The stock that has big open interest at 300. Look at that. That's a beautiful thing. See, in fact, if I wasn't on, I would have shorted right here. There's your ATR trailing stop kind of thing. And the only reason I do that, you're betting on the 300 again. So with the bond selling off. But I haven't done anything now because I'm triple broadcasting. And this is the other thing, and I'm just trying to show you market outlook and showing you this. So you are overbought at some resistance, but then it comes down to, do you believe the moving averages? Well, I do on a daily. I use the 50 on a daily. To me is important because so many people watch it. On a shorter term, I'd rather use price support and resistance, which would be in that zone, right in that zone. So here we go again, and if then. If it gets over this, sure, it could go up to here, but that's a big if. There, and that's what I'm watching. So now you see what we have for the rest of the day. So if you're day trading, this is what we have. We have this right here. So you have that rectangle. So if it breaks that rectangle on the upside, it could go all the way up to here. That's a big if. And if it does, it probably won't be today because the individual stocks are acting so poorly. If it sells off, the problem is for bears is you got that support right under it. Now, I didn't draw that perfect. I didn't have martinis for lunch or mimosas right there. So, in there. So, I have no idea if the NASDAQ's going lower next week. We were talking about September 11th. The market tends to go up. Until I have 3 reasons, I can't tell you whether the NASDAQ goes up or down next week. Longer term, yeah. On Monday, the markets have a tendency to go up. After that, yeah, I think the markets could go down, but I don't have enough of a read to have a position into next Friday yet. And the reason I don't is exactly what I'm showing. This could go up to here first. Now, let me just tell you, Art, if it does go here, fills that gap, whether it's the NASDAQ or the ES, I mean, it looks like big resistance to me. So right now, I'm watching like daily, I'm watching all of this. This seems like big old resistance. The problem is I'm showing like micro ideas. If that area, I gotta think you're gonna go back down, but I have to respect the strength, seasonality on September 1st. After that, yeah, I think it could go down, but there's another thing we're missing. So you got the AI stocks like Nvidia not acting well today. Oracle has earnings after the close on Monday. So that could have a lot to do with these AI stocks. The other is you had the CPI coming out on Wednesday. That can affect it. So right now, longer term, yeah, I think you go lower. Shorter term, I'm not going to bet on a September 11th bounce, but I might not do anything in the meantime. And I know that's like a cop out, but that's where I am. Now, I got another one for you. So, in answer your question, though, what would make me do something under the market for next week? So, number one, this is still a push. I mean, can't tell. So, you got that gap down. It's hard with the rollover gap because they went to December. So, I'll just give you that one. So, you see on how it filled the gap in there. In fact, the box charts I do Sunday night, Tuesday night, and Thursday night showed that gap fill. That's why I'd really like to short if that breakdown right here is tested. Then I'll get really bearish, but I'll have to see a bearish pattern first. So I'll miss the beginning of it, but I'll get the next part. So the big deal is it going to get over that? Right now, when the whole group is acting like garbage, all it looks to me is it's filling the gap and that's it. So now it's stuck between that right here and that. So that's how I look at it. If you're a futures trader, you probably could short up here versus the high. So that's where I am right now. So, but Art, definitely, let me just structure a trade. You do not have to do it because, like I said, September 11th. But let's just say you want to mess with the QQQ because overall you're bearish. I'm not saying just you, but I'm just saying we're bearish. This is just a scenario. I'm not saying to do it. So let's say that we're thinking that all this did was fill the gap and now it's overbought and it's a big bear flag, sort of bear flag, not perfect. And it could easily go to 367 right in here. But if you're wrong, you don't want to lose a lot. So how would you play it? And like I said, Art, this doesn't mean to do it because it's September 11th, but let's just say you want to play in this area for next Friday. How can you play it in a way where you'll lose as little as possible? So I'll show you. We did these. We made money. I wimped out and didn't make as much as I should have made. The other one we did, we got out and made about 10%, and we would have lost 50%. So net, we came out ahead on both. But this is one way to do it. Let's say at the minimum, you think it's going to test the low by next Friday. You know, like I said, it could go up here first. So one of the ways to do it is this way. I'm not doing it yet. I'm just giving you for instance. So one way is to go in and do something real wide. Like that. I mean, really, in the grand scheme of things, $1.78 isn't bad. You have to live and die till next Friday, but it's not bad for a 7-point wide under $2. I mean, that's just from experience. What's the negative? The negative is if we're too right and it goes to like 363. But that's an idea. That's an idea. So I just want to show you an idea. I'm not going to do it. I'm just showing you that if we do think it's going to go and test this, but it might go here first, but we're not sure, you can go do something as cheap as possible. That's all I mean. There. So I can't share this in, well, that's the idea for you. But that's the idea for you. Now, keep in mind through the whole thing in here that overall I don't like the markets because usually the bond market needs to rally while the Nasdaq sells off so you get some kind of positive divergence. The reason I'm saying that, look at the bond market on a weekly chart. It's ugly all the way down here. So what's that mean? Doesn't mean you have to short at this moment. But the point is, there's such an alternative to stocks at the moment. So the other thing is the higher yields go, the more that PEs and price to sales should contract, which would hurt the NASDAQ more. But right now you have that whole AI phenomena that's helping. So you have a lot of differing things in there. So if you're going to play something, you want to play something as cheap as possible if you have an urge to like participate. I mean, that's how I look at it. And as you see right now, it's just drifting. And I think the reason it's drifting is because on the one hand, you have a lot of NASDAQ stocks. I mean, the NVIDIAs of the world refusing to go up. The other reason is that whole schmutz in here. Like I said, this is your low risk entry point, but that doesn't mean to short it. It means to look for a reversal pattern. In here, all bets are off. It's just too wiggly in here to decide what to do. And that's where I am at the moment, of not doing too much yet. So, like I said, Art, I like the idea of playing on the downside, but the problem is, because of historical stuff, I probably have to wait till after September 11th. In fact, let's do it this way. We're going to go to on demand, not if it's September 11th on a Saturday or Sunday. So you got to go back to 2020. You're going to see it's pretty interesting to see, no matter how bad it looked on the opening, it ends up. Yeah, this looked terrible on the opening. Look at that. And it ended up. So that's September 11th, 2000, up here, 2020. But what did it do the next week, the third Friday of the month? So that's what you were asking. Let's see. So as you see already, the market was acting terrible. Terrible, but it went up September 11th. So let's see what it did September 18th. There's September 11th. So it went up for a day, and then it went down to test the lows. So, and there you go, the week later. So you didn't have the perfect timing, but you would have made money. That's exactly what I'm talking about. Let's go to September 2019. So what are you seeing in there? What you're seeing in there is, yeah, market closed on its high. Isn't that amazing? So that's September 11th, closed on its high. Sort of similar to now, that you have that lack of resistance up here and then a lot of resistance. So that's 2009.99. Sounds like I'm selling something. So same thing. Let's go to the third Friday of the month and let's see what happened. Well, there you go. So what did it do September 11th? It went up. What did it do by the third Friday of the month? It closed down. In fact, here you go. There's September 11th, right here, right up here. So you got that patriotic rally, no doubt about it, from there to there. What happened by the third Friday of the month? It went back to where it was prior to September 11th. That's exactly why you look for a butterfly if you want to get in early. If I'm wrong, but it's amazing how often this works. Now, I didn't go to 2018, so I could be making a fool out of myself. Nope, there you go again. Rally on the close. Did it rally to be up? It sure did. It opened here and rallied 20 points. So let's see where it was third Friday of the month. I'm going to go back to hourly. So September 11th. Press the wrong one. And let's go to the same thing. Same darn thing. The 21st. This one it went up. It went and tested it. But yeah, it went up. What's the difference? I bet the 4-hour, the daily looked great. Yeah, there you go. You were already in a massive uptrend. I'm talking about a choppy market. But even with that, September 11th went up. So I just want to show you historically a lot of the things I've seen. And that's what I'm seeing right now. Now we have another thing. You see what's going on with the ES. The ES, it's a fierce fight between the Bulls and the Bears. So is this going to go? I'll put the ES, the normal ES, the one that's not as active today, because you're starting to have the rollover, but it might make a difference when you're looking at a chart. Usually Thinkorswim adjusts it better than TradingView. There. So you see the fierce fight. So on the one hand, you have that it's overbought, but it's getting near the resistance. But on the other hand, there's so many stocks that won't go up. And that's your dilemma at the moment. Which means at the moment, remember, that's not NASDAQ 100. You're used to the NASDAQ 100. At the moment, you can't tell. Just can't tell, because now look, do you really want to be short when it broke this and this might be a bull flag? No, I don't want to be short. If this was upside down, darn right, I'd be short. So let me show you what I'm talking about. If you turn this upside down, let's see if I can get it. There, that's upside down. If I saw that and I saw it get under here, darn right, I'd be short. I'd be massively short. But we don't have that. That's upside down. Just keep that in mind. So you just don't do anything yet. And let me just tell you, when you play that XSP that I showed you, and Art, I want to show you this also. This sometimes other indexes can give you a feel. So I think you see what we're watching. So if that holds, yeah, you're talking about here, which could happen Monday. That's number one. That zone right in there, that zone. In fact, let me copy and paste that if I can just so you have sort of an idea what I'm watching for tomorrow, for Monday. That's what I'm watching, that resistance zone. Now, that's not saying it's going there. And unfortunately, it seems like I can't copy and paste on the YouTube, so just pause it and do it. I don't know how to transfer it. I wish I did, but it won't let me. I am trying, but I'm failing. So that's where I am. But that's what I'm watching. So if it breaks, yeah, it could go to there. That's not a massive move, but that. Now, let me just show you that if we were playing the XSP in the Chart Patterns Mastery, only with house money, we did great earlier in other things. We went and bought this at 49 cents, a put spread. We sold it at 42 cents. That's what you heard me like stop for a second. 43 cents. So you lost $6 minus commission. You lost $10. On the other hand, if you go and do the SPX, you would have lost $100. And you probably would have gotten stubborn and stayed in it. So just keep that in mind. I watch that a lot. And it emotionally will wear you out if you mess around with the SPX. So it's a lot easier if you're not sure to play the XSP. That's all I mean. So I'm telling you, your goal for today is to watch that. I mean, my goal, this is what I'm going to do for subscribers. That versus the individual stocks acting terrible on any downtick of the ES. And that's where I am. When I see that, I just go and do a long-term put spread and like the QQQ art, and that's all I did. So as you see, the market's fighting to break up from that bull flag, but these stocks won't let it. So, that's how I'm looking at the market. Now, I got another one for you. So let's say this doesn't go up. It doesn't seem like it wants to go up. So I can leave you with this. Yeah, Tesla usually has big old open interest. Yeah, the stock acted great till the last 10 minutes, 20 minutes. Where's the biggest open interest? I bet you see 250. Look at that. Evenly dispersed. 15,000, 17,000. Look at the 52 and a half, 11 and 5. 55, 18 and 6. The most evenly dispersed is the 250. And I'll probably try to play that later. So try to play it going to that. So want to combine it with charts, but combining with that open interest thing in a whippy market. Sort of a slow whippy market. And I'm trying right now to see how I can post these in the YouTube room, and I can't figure it out. So unfortunately, that's where I am right now. and not sure what to do on the close. I'm telling you right now, it's all going to come out to those open interest. And if this has a little uptick, the NASDAQ, of how the biggies act. And right now, they're not acting so hot. So that's where I am right now. Thanks for being with me. I really appreciate it. And have a great weekend.